Wanted to do a full Adobe Stock Analysis, breaking down ADBE Stock as much as I can. We've seen a huge sell-off in ADBE Stock, and I wanted to break down where I think I am with this. First and foremost, this is in my primary IRA portfolio. I've had Adobe for some time, always loved Adobe, but the past couple quarters we've seen just rocky all the way up, huge down, trickle back up, huge sell-off. This has been consistent. Their AI products are just falling short, and that's really one of the biggest bullet points you've got right there. Two things moving forward. First, ADBE stock, Adobe stock itself, is valued at a price where if we see the economy moving forward consistently, ADBE stock would be a buy at this level. Unfortunately, I don't see the economy moving forward because I think the Federal Reserve is going to have to redo what they just undid. I believe the Federal Reserve has lowered interest rates too fast, should not have, and because of that, because of the economic data points we've been seeing, they're going to have to probably pivot and send interest rates right back up. This will rock the stock market across the board. All of a sudden then, given that kind of scenario, a lot of stocks are going to be buy on the dip opportunities. ADBE stock might be one of those. Let's jump in and I'll do a full Adobe stock analysis. Let's jump in. All right, here we are looking at ADBE stock, the 4-hour bar chart, going back a couple months. I think actually this goes back to the summertime. You can see the big sell-off in ADBE stock in September, then again in December. Adobe stock, to me, I love this company because it's sort of like a Microsoft or any of those other kind of software as service companies. They produce a product, then technically they don't have to do anything else. They could just resell the same product over and over and over again via subscriptions. I love that because without any additional inputs, they continue to get income. Those kinds of companies to me are important. That's it. Adobe is one of, I have 12 holdings within that portfolio. That is my main IRA account holding. I have other things that I try to do, trading and stuff like this. I have another account altogether that's not part of my IRA, and that's where I do a lot of my day trading, just trying to generate a little bit more income that way. But this stock, Adobe stock, has been kind of frustrating owning ADBE stock, and you can see why. It's their AI. Their AI is crap. It's not crap. It's just weak, I should say. I probably shouldn't have used that word. Moving forward, taking a look at this, let's pull back a little bit so you can see the bigger picture. All through, and this, my bigger pictures, when I look at them, I go back to, if you ever want to know how an economy is doing, go back to the biggest event previous. And in this case, it's all COVID. Prior to that, 2006 to 2008, the financial crisis, that would be a good point right there. Then before that, dot-com era bubble, then the 1991 recession, that you start at these kind of increments and you look forward until the next increment. And hopefully that doesn't happen too soon. Given that, obviously 2020 and then 2021 for Adobe stock, ADBE, was quite pleasant. Then huge sell-offs throughout 2022. I had done a few videos on this back then, kind of venting frustration, being one of the shareholders of this. But it's rebounded, and I felt that we would see continued moves higher. We haven't broken some of these bigger numbers back upwards. Now it's all about the economy. Again, anybody that's follows me knows that first and foremost, I look at the economy and I ask the question, how's the economy doing? Going back, in this case, since 2020, March 2020, when the COVID shutdowns occurred. What happens next? And we had the Federal Reserve moving interest rates throughout 2023, and that really kind of rocked and withheld additional growth in the stock market. Since then, it's grown quite nicely to the point where we've exceeded what is normal for a bull run of 2 years. But you really need to go all the way back to 2020, that this era, even though we did see the Federal Reserve taking aim at inflation throughout 22 and 23, we've seen a continuation beyond that. They believed they hit a soft landing. I thought it was a terrible idea for them to be lowering interest rates when they did. And I think they actually kind of did that for the election. I said they should have waited till after the election. They did not. Now, I believe they're going to have to switch gears. And I believe the stock market, broadly speaking, is probably going to get rattled. And I also believe that the current administration is probably going to do a few things that are going to rattle the stock market even more. The stock market loves continuation of nice, peaceful calm. I don't believe we're going to see that. Therefore, ADBE stock, I believe, would and could sell more. But it's undervalued right now. So if it does move lower and they're able to adjust forward earnings and revenues and still see growth, that could be very positive for anybody looking to buy ADBE stock. All right, let's break it down. Let's do a full breakdown of ADBE, Adobe Systems. Q4 coming in at 561 for revenue. Gross margins were solid, 88.3%. They kind of had a spurt higher on gross margins the previous quarter, but they've been basically flatlined there. Operating margins remain kind of steady at 36.3%, moving towards net margins where it's all about. 30% on net margins. This is fairly consistent. So their margins are kind of remaining consistent, but it's the forward earnings or forward revenue that is really having a lot of analysts be concerned. One of the reasons why Adobe stock has been hesitant to move higher. Earnings per share, 481 on Q4, the latest quarter, continually increasing. Earnings per share is one of the hallmarks of a company that I'm looking for. I want to see consistently increasing revenue, consistently increasing earnings per share, and I want to see some pretty decent margins. And I think Adobe Systems really hits that, and that's one of the reasons why I pulled the trigger on buying Adobe stock itself. Price to earnings ratio, 41.6. This is a bit rich, but the yield's a little juicy when you look at the forward. So currently, it is a little overpriced, but the numbers, when you look at what they could be earning going forward, is a positive sign. All right, projected revenue for 25 and 26, you're looking at 23.5 and 25.1 billion each. We're going to be focusing on the 2025. Projected earnings per share for 2025 forward earnings, $20.41 for Adobe Systems. This breaks down the U.S. 10-year Treasury. That's your benchmark. You start with the U.S. 10-year Treasury and ask the question, I could buy this with very little risk and I'll earn about a 4.65% return. And the nice thing about this is if we see the stock market selling off, investors will rush into treasuries, pushing up price, and all of a sudden yield would fall. Because of that, if you actually did buy this U.S. 10-year Treasury yield at 4.65%, you're going to see a lot of appreciation in what you're holding because someone else may only get 3.5%. So that's a whole extra 100 basis points that you could get if you were to buy the U.S. 10-year Treasury right now. If you thought, you know what, I think this guy's right. I think the economy's done. I think the Federal Reserve is going to have to push up, and we're going to see a lot of chaos this year. So 4.65 is looking pretty good as a solid guarantee. Then eventually the Federal Reserve goes ahead and they lower interest rates. You'll see people flight to quality pushing into the U.S. 10-year, and then the Federal Reserve is going to have to move interest rates, and all of a sudden, maybe we see 3.25. So that's a pretty hard sort of, wow, what should I do? Well, we break it down. The earnings per share projections is $20.41 versus the $4.43 on ADBE price. Your yield, 4.60%. So assuming zero downside risk, which can we actually assume that? The Treasury yield is competitive, but Adobe is, that forward number, should Adobe hit their revenues, should Adobe continue to improve on their earnings per share, ADBE stock could outperform with the 443, maybe hitting up to 465. There's 10% return right there. 5.5%. So breaking that down, I still believe this economy will hesitate. I believe the stock market is likely to see anywhere from a 5 to 10% decline. We're way at the top. We're starting to see some issues, but we're in the middle of earnings season and they're fairly decent. But going forward, I see issues and I see the Federal Reserve having to move. Therefore, Adobe Systems, looking at ADBE stock, you could probably pick this up sub 400. As a shareholder, I'm not really happy about that. But as someone who trades, I will be doing a lot of inverse ETF trading strategies, employing them to protect my high watermarks. Now, I didn't protect, Adobe was considerably higher earlier, 2 years ago. And I've not protected that, but I continually trade. So it's kind of like, well, I mean, I rationalize till the cows come home, is my attitude. This is my take going forward. I see the stock market getting rattled. I see ADBE stock selling off, and that would be a buy on the dip opportunity if they could turn things right back around and get their revenue right back up and do something about their AI prospects in the future, which is a matter of time. So any kind of hesitation in the stock market selling off would be an excellent opportunity to pick up ADBE stock. Make sure to hit the like and follow button. Also, my Substack, if you want to get written content, help support the content, make sure to hit the link over there and start following me there. We'll see you in the next video.